Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Bull versus Bear Trade Day webinar. Steve Miley on the call for Monday, the 7th of March. So welcome everyone. Well, we've woken up to more aggressive volatility across financial markets in here today. And I'm going to kick off just by looking at, what the thing that's really leading all the headlines in here is oil. So over the weekend, Biden talking about a ban on using Russian oil. Going to be quite difficult to maybe to implement, and will have significant consequences, particularly for Europe. But nevertheless, that saw oil spike significantly higher in here, and you can see in here the crude future in here jumping all the way up here to hit $130, 130.50. But since then, has significantly retraced back lower. Look at where we are now. Given we had a really strong close anyway. We gapped higher. We had a big bull gap. The market then surged after the bull gap. So we opened up in here and around. So what we got? The open was around 121, I think. Yeah, 121.33, spiked all the way up to 130. So added on another $9, having already gapped higher from the close, which is at 115. So we went from 115 to 121, $6 up, then added another $9 in here, and then has given it all back up again. So this at the moment is a really negative candlestick, a potential for what we call a blowout top. Now, there are a lot of macro articles in here, and if we go and take a look at some of the stuff, so like oil surge, it's grabbing the headlines everywhere. Now, everything that I've opened up here, even when they're talking about stocks, they're talking about stocks in relation to oil. So in here we've got from Reuters as well, oil leads commodities charges, shares and euro dump in here, and then 5 things to start your day. Oil surges, crude soils, oils is rallying against. Biden was weighing an embargo of Russian crude, okay, with the country possibly moving to the measures without European allies. So maybe doing it without Europe, but Europe also potentially could be doing that as well in here. It's not just oil, though. We spoke last week about commodity prices broadly rallying. Wheat higher, aluminium, metals higher. Wheat in here is even gone. Wheat hit the daily upward limit for a 6th session in a row. Okay, so wheat surging higher. I read today that Russia and Ukraine, second and fourth largest producers of wheat globally in here. So, but then we've also had breakouts to the upside on copper. We've seen aluminium soaring in here. Gold topped $2,000 an ounce. First time in 18 months. Palladium hit an all-time high. Base metals fresh high. Nickel spiking higher as much as 31%. Aluminium over $4,000 a ton. So you've got commodities surging across the board, adding to the already potential inflationary pressures that we've had in the system anyway, that central banks have been concerned about. And on top of that, obviously all sorts of issues with, higher prices causing issues for consumers around the world. So, all of this, a massive negative in here for stocks. And we've seen stocks obviously hit on the downside this morning. European stocks particularly lower in here. Asia Pacific index dropped 2.9%. The Japan's topics 2.8%. And the European indices around about 2.5% lower in here today. And we can take a look at those in here. So if we take a look at the European indices. So in here you'll see, some of them only 0.5%, but look, 2.5% in here. Belgium 1.3%. The French CAC DAX is down over 2%, and they were lower than that. They've actually rebounded. The FTSE 100 down less than 1%, but was again lower than that. So markets have sold off and have already rebounded, and that's kind of echoed by that chart we just looked at in here, the oil chart. Oil was all the way up here for inflationary pressures and has recoiled all the way back lower. So if we step in and look at the 1-hour oil chart in here, so we won't see it there, it's up here. So there's that open, first hour of trading, spiking over, recoiling lower, and now pushing back to the lows for the day. We could easily close the gap. We could easily be back down here at 115. That would be a big negative. I'm not saying that will be the top end for good, but it could be the top in for now, okay? And you could then see oil retrace notably lower. It's going to be really interesting to see what happens through the US session with oil. Does it start to fill that gap, which goes from pretty much from like 115 up to like 121? So that's definitely something you need to be monitoring. Oil now, if oil pushes lower, that could be positive for stocks in here. Let's go and take a look at a few more of the articles in here as well. So we've already looked at the European stocks in here. What's it done for the US futures? Well, we'll come and look at the chart shortly. But US futures in here down about, or having been down 1.5% on Friday, down another basically 1%. You see S&P, NASDAQ and Dow all down about 1% in here at the moment. So they've been significantly hit on the downside. And, the news-wise is all about oil and commodities. So oil leads commodities charge, shares, and euro. And the euro are getting hit as well. Expectations of a more dovish tone from the ECB, and obviously the proximity of the eurozone, the euro economy, the eurozone economy, the European economy likely to be more significantly hit by everything that we're seeing going on in Ukraine than other parts of the world. So. And also the FTSE, the UK market, not immune to that. FTSE 100 hits a 7-month low as oil spikes stokes inflation worries. So it's all being driven in here by concerns about inflation, concerns about surging commodity prices, food prices as well. Let me come back to that article there. So crude soars, not just oil, it's other stocks dropping. Putin reiterated over the weekend that war will continue and accepts his demands. Latest rounds of talks due to get going today. And there's a couple of little articles on that in here. So these come out on Forex Live within not too long of each other. But basically, Kremlin says Russia can halt Ukraine operations if Kyiv meets Moscow's conditions, saying that talks due to start at 12 o'clock GMT, but then Ukraine have announced, presidential advisor says new talks with Russia will begin at 2 GMT. So we're still waiting for any potential. We're not expecting any kind of breakthrough in here. Who knows? There may be some progress that could see more of a positive spin on what we're seeing out there at the moment in here. So 5 things to say that were covered most of what we're seeing in that. And again, in here, Bloomberg, similar to the Reuters headlines in here, going with the same stuff. Stocks poised for bear markets as oil soars. US considers ban on imports of Russian oil, and euro down against the dollar. Again, safe haven demand sees treasuries higher, the dollar higher, gold all higher in here. And as we said in here, not just oil spiking older, but gold to copper rack up more gains as war in Ukraine spurs demand. Nickel and palladium spike because Russia is a major supplier. Wheat jumps yet again by limit as Black Sea supplies cut off. So all of these commodities putting upward pressures on inflation, which was obviously already a big concern. It's going to be such a difficult time for the central bankers, right? Inflation is already high. All of these commodity price spikes are going to feed through into even more inflationary pressures. However, this is also likely to tip the global economy maybe towards a recession as well. Okay, a significant conflict that impacts the global economy is likely to have detrimental effects on growth rates. Okay, so is it the right thing to be doing, to be increasing interest rates into a potentially a conflict that could escalate? So it's going to be a really difficult position for the central bankers going forward. And then oil traders already in here, look, call options, so there are options to buy in here, surging higher in here. And so, betting on $200 oil before the end of March. Okay, so options in here spiking, low cost bets that futures surpass $200 before even the end of March in here. So, and again, another article here, look, EU steel prices surge on hit to supply from Ukraine and Russia. So all of these now, and talking about the central banks in here, look, we've got now only a nearly 96% chance, actually maybe a 4% chance. So this is rising. For next week's, I'm fully expecting, Powell basically told us we're going to get a rate hike in the March meeting next week. However, the market's pricing in a 5%. We don't get a rate hike, and now 96% chance of a 25 pip basis point hike, but no chance of a 0.5% rise in here. Let's take a look at, rather than going through the full calendar in here, there's not much actually we've got coming up today, but on the weekly recap that I put up in the market report section in the trading room, here's the market report. So this picks out the major points in here. So we did have German retail sales today, tomorrow's EU GDP, Japanese GDP, and China CPI on Wednesday. These are the main data points. None of these are going to really significantly affect maybe the EU GDP, but probably not. Very backward-looking data, not going to be really affecting the markets we're looking at. Really, the focus really moves to Thursday. We have the ECB, who are almost certainly going to shift to far more dovish. Remember that it was only in February they pivoted to more hawkish, and likely now to be pivoting very quickly back to a more dovish tone, given the events in Ukraine and given the proximity of the eurozone to and the sensitivity to the eastern economies. And then we have probably the standout data, or not probably, definitely the standout data of the week, US CPI on Thursday. Certainly going to be watching that. And then we end off the week with UK GDP, German CPI, probably going to be both, equally important, those two, but probably not massively impacting the markets you guys are trading, unless you're trading the currencies. And then we get the Canadian employment report. The big data of the week is going to be US CPI looking forward. So we're going to be certainly looking for that. Right, let's have a quick run through some charts in here. We've already looked at oil. I think there's real risk that oil goes down into this gap. Breaks below here, but the current lows. Current low in here, the low for the day, 120, 133. That's where the market opened. Don't think we dipped below that here yet, have we? Actually, we have 120, 129. So we did just dip our toe into the gap there. But it wouldn't surprise me to see at least partially close this gap, maybe more fully close the gap, unless we get some further news, unless Biden speaks and talks about the situation with US importing oil in here. Let's take a look at gold. Well, we're looking at the commodities, and there you see in here, look, gold higher again through $2,000. It got very close to the spike high. That was the invasion day, remember. The spike high on invasion day was up at 1976 and a half, and we got really close to that on Friday. We've got a really small gap in here, and then the market took out $2,000. We've been as high as 2007 and a half, but again, look, recoiling back low in here. There's a mini gap there. If we start to close that mini gap that we have on gold, this could be lower again in here. If we step in to this 15-minute chart, I'm going to actually go to maybe look in here. So there's the spike higher, and there's the mini gap, spike high. You've got a double top pattern in here, high, high. If it breaks, doesn't even have to start filling the gap. It goes below that low there. That low there is 1982. Back below 1982 gives you a double top on gold. Then you'd aim at this little mini gap. The gap is between 1974.9 and the low from today is 1977, so basically 77, 75. But 82 is going to be the big trigger level. Through 82, you could see, and then the double top, you could measure, you could do the whole double top measure today. So just bring us back down here to that 1965 potentially. So, watching out on the downside. So these markets actually looking like they could move back in the opposite directions to which they've been going in here. Let me go take a look at the equity markets now. So equity markets obviously negatively impacted. I'm going to start off with the S&P. So initially negative impact, but look in here, another really strong rebound, intraday rebound, because of that turnaround. We've seen in here, strong turnaround rebound in here. Despite European equity markets almost back to unchanged now on the day. Right, we are still lower on the day, but really a positive turnaround rebound, really positive candlestick. And stepping in here, we've got 15-minute chart in here. Again, look, double bottom already completed through here. So the market lower rebounds through here, and then it's also through here. And look, this bigger trend line. Remember, we've been monitoring this much bigger trend line that comes all the way down in here from the 3rd of, it's actually not that big a trend line, sorry, the 3rd of March trend line. Through here, look, played with it here, played with it here, played with it here, played with it here. Big reversal of that trend line. This is all setting up quite bullish going now into today. And even if I redraw this trend line, I'm going to pull that trend line out to here. We're through it anyway. Even if you've already drawn and had the shallower trend line, we're through that trend line. Let's go take a look. And if I step out a little bit more to these bigger trend lines we've got, it's going to go out to the 1 hour chart. So there's the smaller trend line. Why are we not seeing that bigger trend line off the? Oh, there's the bigger trend line off the very top. That we're still a long way from that. So we're still a long way from that trend line. But nevertheless, this could easily push us back up in here towards that 43.50 kind of area on the S&P. Quick look at the Nasdaq. Similar story on the Nasdaq as well. Look, really strong. Either a hammer or a dragonfly doji candlestick at the moment. Obviously, a long way. We're not even had the cash market open yet, so a long way to go. But this could be end up being a really positive candlestick. Already rejecting the downside, and again stepping into the 15-minute chart. What do we got down here? 1, 2, 3. You'd argue triple bottom down here. Low here, another low here, up through this peak here. Now we've got this kind of this trend line that comes down, and even if we redraw this trend line, so this trend line again comes from the 3rd of March, beginning of March high, down through here. Obviously, we're already up through it, but even if you redraw this trend line, I'm going to get rid of that one there. Even if I redraw it and pull that trend line out to here, through these peaks, which works really well, it's reversed that as well. So really strong rejection here, triple bottom pattern in here. Real risk for this to be pushing back up towards like 13,925, maybe even 14,000 today. So the market's certainly setting up more bullish despite all the negativity, despite the initial price action, despite the spike higher in oil, despite the spike higher in commodities, strong turnaround rebounds. All of this looks like it could end up being actually a bullish day once we get into the US market open. Now, I think the US market open is going to be key. It's going to probably be relatively stable until then, but watching out for that US market open. Any kind of dips in here, I'd say buying the dip in here at the moment. Now, if it breaks below the lows, you're short again. You're definitely short. If it starts giving up maybe even half of the rebounds we've had in the last hour or so, you're short again. But for now, this is all setting up quite bullish going into today, quite risk on going into today. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Please do stay safe out there. Keep those stops tight, please. If you need to trade the micros, trade the micros. And I'll be back with you with another bull versus bear market tomorrow. Take care.